Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Friday, February 20th. We are kicking off the show with exclusive reporting about OpenAI's 200-person team working on the company's hardware ambitions. Next up, we'll bring on a public markets investor as we continue to unpack whether or not the software sector is oversold right now. Also, it's a Friday, which means it is time for another edition of The Editor's Cut. We are bringing on two of our editors to unpack the movement in social media stocks this year and the growing competition that they face in the AI era. And finally, we will wrap with a fascinating story from our health and science reporter. Silicon Valley has an obsession with longevity, with many tech billionaires pouring money into the sector. In this weekend's big read, we dive deep into one company that is transplanting mitochondria from younger people to older people as a way of testing anti-aging technology. We're going to talk more about that. It's going to be a fun show, so let's get right on into it. OpenAI is working quickly to launch itself into the hardware game, and according to our new reporting, the company is looking to launch a smart speaker and possibly even smart glasses and a smart lamp. My colleague Stephanie Palazzolo today published an in-depth look at the latest developments on that project, and I want to bring her on to share more with us about what she has learned. Stephanie, welcome back to the show. It's great to have you here.
Thanks. Great to be here.
So remind us, where exactly are OpenAI's hardware ambitions?
Yeah, so OpenAI is actually, in various ways been working on hardware for quite a while. So in September 2023, we were the first to report that CEO Sam Altman had been meeting with former Apple design chief Jony Ive about, developing some sort of AI hardware device. So that was, over 2 years ago at this point. Then last May, OpenAI acquired the startup that Jony Ive had been working on called IO for close to $6.5 billion. And so that was kind of their way of officially bringing those device efforts in-house. And, since then, the employees that joined OpenAI in that acquisition, plus other OpenAI researchers and Lovefrom, which is Johnny's separate design studio, they've all been working together to create prototypes for this kind of personal AI device that will be coming out. So,
And so,
sorry.
and so what do we know about the device now? You said in your story, they're looking to develop kind of like a speaker?
Yeah, so that's the main device that it seems like is going to be coming out sometime in, the next couple years or so. So basically this will be a kind of smart speaker that has a camera that can take in, audio and video and kind of see what's going on around it. And that's likely to be the first device that's going to be shipped. It's probably going to be between $200, $300. And, at the earliest, it won't be shipped until next February, as we saw from a court filing from one of the leaders working on the device. And as you mentioned, they've also prototyped some other designs, such as smart glasses and a smart lamp, but it's less clear whether those are actually going to be released as kind of official products.
And they've got 200 people working on this thing?
Yeah, I mean, it's a pretty big effort within OpenAI. Obviously, I think at this point, OpenAI has, thousands of people working there, but this is definitely a very real effort that is going on there.
Okay, so now let's start with the speaker, because the speakers looks like it's the one that it's sort of closest in development. What is the company thinking about differentiation strategy and how this is going to be different from all the other smart speakers that are out there on the market?
Yeah, so I think actually what's interesting is that what kind of makes this speaker different from what I've heard is not necessarily the kind of physical design or what it might look like. And it's more about the kind of software that's powering it and the way that consumers are going to be interacting with it. So, as we wrote in the story this morning, there was a presentation last summer where, leaders from the device team basically told OpenAI employees that this device is going to be able to observe users through video and kind of nudge them towards actions that the device believes will help them achieve their goals. So, a very kind of silly or basic example of this could be you can imagine the device observing the user kind of staying up late the night before a big presentation, for instance, and nudging the user to go to bed. So obviously that's kind of a bit of a silly example, but the kind of overall idea here is the device taking a more proactive approach to its users and influencing the users' lives versus, what we see today with our phones.
Now, I want to ask you about Joni Ive's role in all this. He obviously came in with the IO acquisition. What do we know about how OpenAI's team is working with Joni's team?
Yeah, so the really interesting thing about that is even though OpenAI paid, almost $6.5 billion for IO, Johnny is not actually an official employee at OpenAI. So what he does is he leads his independent design studio, which is called Love From, which is separate from OpenAI. And so he is kind of Love From is kind of the entity that's actually in charge of coming up with the kind of design of the device, like what it's going to look like. Is it going to be a speaker or glasses or a lamp or something else? And so there, he's the one that kind of has like final say and veto power over what the design of the device is going to be like. But interestingly, he's not really kind of frequently like physically seen in the office, but he's obviously very well known in the hardware space. And people kind of like talk about him like this kind of omnipresent figure where he's always coming up in conversations, even if he's not physically there. And people talk about him kind of saying things like, Johnny would like this, he wouldn't like this. This is what he would say about this sort of design. So he's very much kind of like emotionally present, even if he's not kind of physically present in the office.
And so how do OpenAI's employees feel about this partnership here with this team coming in? I mean, have they been working well together?
Yeah, so I mean, I think overall it does seem like things are going well, but one thing that I, actually predicted last May after the acquisition happened that seems to be coming true is that there are these kind of culture differences between IO employees and OpenAI employees, where Joni and a lot of the leaders that came in through the acquisition are former Apple leaders, and so Apple is kind of known for this very like unique culture where they're very secretive. Like there are these kind of silos between different teams. There's very strict rules around which employees are allowed to know about certain projects or not know about other ones. And they're kind of known for this very like meticulous approach to design where you're moving carefully, you're moving slowly, you're testing like every possible iteration of the design, which, obviously can take a bit longer. And then you kind of compare that to OpenAI's approach, which is very like, kind of typical Silicon Valley startup, move fast, break things, like let's move quickly, let's release models quickly. And you can kind of start to see how there might be some kind of tension there.
So, what questions are you trying to get answers to now? I mean, we have this product, we have OpenAI that is building out an entire supply chain, which is something that's very different from building out, AGI. Although in some ways, I guess you do have the sort of industrial operations of setting up a data center, partnering with suppliers and stuff like that. So that's one part of this. The other part of this is what the product is actually going to be. And the third part is the people that you mentioned. What are the big reporting questions on your mind right now?
Yeah, so I think right now I'm thinking through a lot of the things that you mentioned. So first, beyond the speaker, what are some of the devices that are going to be coming next? Because it's important to remember that this is going to be a family of devices, not a single device. And as interesting as a speaker is, like we have speakers today, we have the Alexa, this is something that a lot of people already have in their homes. So I'm curious what's going to come next that maybe might be more unexpected. I think the second thing is what you mentioned around the supply chain and how OpenAI is navigating, finding suppliers for this hardware device, which is something that it doesn't really have a lot of experience with, and how that is intersecting with what's happening at Apple. So, it seems very likely that Apple and OpenAI are kind of going after similar suppliers and folks in the supply chain. What is that leading to? Is that causing issues for them? Is that causing tensions? And then I think just the last thing is like, you know, how the device is going to change the way that consumers interact with AI. So, today a lot of us interact with AI through chatbots, basically, whether that's ChatGPT or Claude or other chatbots that people use. And I've previously reported that, uh, folks at OpenAI want this device to be audio first, so something that we talk to out loud versus typing into our phones or our computers with. So, how is that going to kind of change the way that we're using AI and the way that we think about AI? Is it going to become more like a friend or a companion that you're kind of just, musing out loud to? And what does it mean for AI to kind of work in a more proactive way in our life? Like, is it going to be having more of a impact on what decisions we're making, versus maybe being something that we turn to whenever we have a question? So lots of questions, and I think lots of interesting stories that are coming, related to all these things.
And I think, one thing that I might add that I'm wondering about here is even though we have Joni Ive in the mix, and even though the iPhone, for example, was such a pivotal moment for Apple, I mean, Apple had devices before the iPhone, in the iPod. And nowadays, I remember when the Vision Pro came out, people talked a lot about, hey, well, Apple's not hoping to make a dent in their sales with the Vision Pro. You're not thinking about it the right way. This is actually more of just, it's a little bit of a proof of concept, a little bit to see, if people buy into the idea of using it, how they use it, maybe even some data collection. And, if I look at Meta's device strategy, it's somewhat similar. I mean, those are selling quite well, but still, even though they're playing the long game here that they want the device, I don't think anyone made the bet that the first device that they drop is going to be the game-changing device. And so I almost feel a little bit like everyone's waiting for the first device, but I don't think it's going to be the first device that actually is the big, OpenAI moment that once again they take over the whole ecosystem.
Yeah, I think that's super true, and I think there is this kind of balance between wanting to come out of the gate with a bang, but also, you know, wanting to kind of like test the waters a little bit with consumers and see how they feel about this device. So I agree. I'm sure their first device will be really interesting, and obviously I'm very excited for it, but I think I'm almost more excited to see what the second and third devices are going to be.
Great. Well, Steph, I want to thank you for coming on. That is Stephanie Palazzolo, our AI reporter here at The Information. The software sector continues to stay significantly depressed compared to where share prices were at the start of this year. The Bessemer Emerging Cloud Index is down more than 15% year to date. Will it come back? Is it oversold? What will happen with AI? These are all the big questions on everyone's mind right now. I want to bring on Evan Scorpin for his perspective on all of this. Evan is partner and head of public equity markets at Lead Edge Capital. Evan, welcome to TITV. It's great to have you here.
Yeah. Hey guys. Thanks for having me.
So what do you think of software valuations right now?
Yeah, look, software it's exceedingly cheap, right? People focus on revenue multiples. The revenue multiples are public SaaS businesses are the cheapest they've been in 15 years. But honestly, we don't think about that. What we focus on is free cash flow multiples, and the businesses have the median businesses ramp to 20% margins, and I think the software sector is trading at 19 times, maybe 18 times free cash flow, which is, I think, the first time ever that it's traded at a discount to the S&P 500, which is more like 28 times free cash flow. So it's really cheap. The public markets don't like uncertainty, and we're at a period where uncertainty is high. And so, I think it's created this kind of air pocket here. But overall, the sector seems kind of, unbelievably cheap.
So let's talk about free cash flow multiples. Where do you think the sector should be? Well, what's the Evan Scorpin number on where you think it should be compared to the S&P?
Yeah, look, over time, software should trade at a premium to the rest of the S&P 500. The growth rates of these businesses are twice as fast. The S&P is growing 7%. The median software business is still kind of double-digit growing, and the free cash flow margins here are 20%. Which is nowhere near kind of mature margin levels, right? A lot of public SaaS businesses have been putting up 40% incremental margins, which kind of suggests that margins are heading in that direction. So overall, kind of a free cash flow per share within the software sector is growing meaningfully faster than the S&P 500. So over time, I think it deserves a premium multiple. But I think, people don't like this uncertainty. And so we need to get, through this period where people don't know who the winners and losers will be. Before you kind of see that re-rating happening.
I want to go a little bit deeper in free cash flow multiple. We haven't talked about it too much on the show here, but one question I always have is all free cash flow equal? And you have stuff like stock-based comp, which is baked into that at times. How do you think about that?
Look, we can look at free cash flow per share, or we can look at GAAP EPS per share. I think both are very reasonable metrics to look at. At times you can manipulate both of these metrics. right? GAAP is very easily to manipulate. It's been a huge issue in, pharmaceuticals and M&A. GAAP has a whole variety of problems. Over time, those two metrics, I think, are both acceptable. I think are both reasonable. You can look at both. We focus on free cash flow per share and account for dilution in the share count growth over time. The reason is that a lot of the SBC metric is a misleading metric as well. It's options that were granted or RSUs that were granted 3 or 4 years ago show up in the metric, and so look, it's a kind of a lagging indicator, the GAAP EPS, whereas free cash flow per share is more of a leading indicator. But I think both are reasonable.
And if rates come down, does revenue multiple become more important in your mind at that point?
Revenue multiple in our mind has always been a proxy for what is the earnings power of the underlying business. And so when people bought a business at, when you talk about 6 times revenue, to me, what I hear is when the business is 30% margins, that's 20 times earnings. And when people talk about, 15 times revenue, look, I think it's what you're doing is you're saying 5 years from now, this will be 6 times revenue, and that 6 times revenue at 30% margins is 20. Like it's always been a proxy in our mind.
Right. I want to talk about the AI story right now. So the narrative here that is AI going to eat SaaS, kill SaaS? Will it replace SaaS? I mean, these are all the big questions right now. What is your perspective on that narrative, and how are you thinking about the cost savings or the potential cost savings that companies could achieve with AI?
Yeah, it's a great, and look, it's the question. I think it's worth stepping back for a moment. Software has been on a 50-year journey to replace labor, right? If you fundamentally think about what software is, we're making labor more efficient, so you need fewer people to do the same thing. We're on a 50-year journey there, and AI is the newest tool, which I think will unlock a significant growth in the software market, right? All of a sudden, software is able to now do things in that labor has done historically that software's not been able to help with. I think first and foremost, this is exciting, right? It is AI is software, right? Fundamentally, it is software. What we're doing is we're unlocking a new power within the software ecosystem. With that, yes, there will be new incumbents coming in that are kind of, people use the word AI native all the time. There's going to be new incumbents. And there will be, there will be the original businesses, SaaS businesses that have deep relationships with their customers. And that's nothing new to the software ecosystem. There's always been new technology, which has led to new entrants into the market. And there's a duking out that needs to happen between who wins, the businesses that own the customer or these new technologies. And I think overall, though, there's this fear that this is bad for software. No, this is unlocking a lot of growth for software. And the question is, who is going to win this incremental growth? Is it going to be the installed base of software businesses which own the relationship with the customers today? Or is it going to be new entrants that the market perceives will be better able to harness this new technology? But I think this view, and the answer will be both, right? The answer will be, as with every new technology that's happened, there will be new entrants and there will be installed base that continues to gain share. And I think that people are trying to draw this black and white thing, and I just don't think it's fair.
So where do the cost savings come from then? If spending on software, whether or not it changes over time, the point you're making is that, I mean, we'll see. AI is software. I take your point, but is it labor budgets then where you see cost savings coming in?
Yeah, look, the software market is tiny. The average S&P 500 company spends about 3% of their OpEx budget on software. People are not excited about AI because it's going to replace Workday or Salesforce. That opportunity is not big enough, frankly. Salesforce and Workday are not big enough businesses for people to be spending $1 trillion in CapEx to displace, right? What are all the AI native businesses doing? Look at the Harveys, the Sierras of the world. They're all targeting the labor market. They're saying there's a population of people these people are, think about the software budget, 3% of the S&P 500, labor budget, much larger, orders of magnitude larger. I think it's 40 times larger, the labor market. And they're saying, look, we think we can replace customer service agents. We think we can replace junior engineers. We think replace. So what are they targeting? They're saying there's a bunch of repetitive labor that we can automate.
Okay.
And will there be some collateral damage on the software market as it exists today? Maybe. But the real opportunity with AI is to expand the software market and steal share from the labor market.
So let's put aside for a moment the question about what happens to that labor. That's a whole other topic. But now you have companies that conceivably will save money on labor, like you're saying, with these new
Yeah.
tools. Where do they put those dollars then? What do they invest in?
Yeah, look, there's this view that, all of a sudden we'll have, labor is not going to be used anywhere and there'll be unemployment rising. I don't prescribe to that. I think we historically find ways to use resources in this country, and labor is a productive resource. And if we, can make customer service more efficient with AI, I think we'll see customer service agents shift to other jobs that are going to be productive as well. And so, what are those jobs? I don't know. But we're, we end up, as we become more efficient, we use the resources elsewhere.
But I guess what I'm getting at is what I thought you were initially saying was that it's coming for the labor market in that you'll have cost savings there. Maybe if you had 1,000 people, now you're doing the same job with 700 people.
Yeah.
And so the question I was trying to get at was, okay, so the cost savings from those 300 people, then what do you invest in? But now what I hear you saying is that, well, no, actually, you still have 1,000 people. It's just that the jobs are different. So which of those?
No, it's a good. Okay. Yeah. Fair question. Look, some of it will flow to the bottom line, right? I think the S&P 500 is becoming, the margins of the average business S&P 500 are growing each year. And I think that'll continue. Like, I think companies are going to get more and more efficient. So some of the savings will drop to the bottom line, and it's going to cause the S&P 500 earnings to grow, and that'll fuel the stock market for years. Others of it will be reinvested, right? People will say, hey, I'm going to turn around and take that money and I'm going to reinvest it into software, into growing my production capacity, whatever it is. It depends on the company.
Okay. How do you think about the new IPOs coming to market? OpenAI, Anthropic, SpaceX. I mean, I think Lead Edge Capital. I mean, you guys focus on a different class of businesses from what I understand. I mean, these are businesses that people don't even know the names of sometimes. People, smaller businesses that are in the background, companies that we probably never will hear of. On the other hand, you have the SpaceXs, the OpenAI's. I mean, orbital data centers. What's your view on the narratives that these companies are pitching?
Yeah. Look, they're exciting. They're exciting businesses. I think we're excited. We're excited to see more of the financials of some of these businesses. I think that there's been a change in the technology ecosystem from capex light, free cash flow generative machines and software to this kind of new era of IPOs, which are capex heavy, consuming an incredible amount of cash to grow. And I don't think, investors have really been able to dig into the unit economics of that enough. And so one thing we're excited to do is to just dig in, to be able to see the numbers. Right? We see the revenue growth rates, but we don't see what's happening to gross margin. We don't see what's happening to free cash flow. So I think we're excited about that. Look, I think the IPO market is going to be tricky. I think public investors have been burned investing in IPOs, and over the last 5 years. And I think, we need to have some successful IPOs where people, who get in on day 1, day 2, day 3, end up being really successful. And that will take time. And I'm hoping these are the investments that do it. I'm a little nervous that we're in this weird period where the valuations at the time of the IPO seem to be sky high. And then we've had a series of IPOs recently that kind of IPO at a sky high valuation. It resets later. That's not an encouraging sign for Lead Edge or other investors to step in at the time of IPO. And so hopefully we see some that kind of price at much more reasonable levels, and we see kind of a more linear rise in share price rather than this volatility, which I don't think is good for the company. I don't think it's good for the venture guys who are in the business today. I don't think it's good for employees. So I don't know how to solve it, but I think the volatility in kind of post-IPO share prices is really unhealthy.
And so last question for you, what are you buying then in this environment?
Yeah, look, we've been active. We're buying, we think we're buying great businesses, sub 2% dilution, really sticky businesses, durable customer relationships, businesses that have proven they can ramp margins over the last few years. And we're buying these businesses at kind of like 10 times forward free cash flow or earnings.
Any names you can share?
Yeah, Mitchell's been on the air. We built a position in Workday recently. We have
Workday. Okay, so you guys are bullish on Workday.
We're bullish on Workday. I think it's one of the highest quality software businesses in the world. And we're in at sub 10 times free cash flow. We think, which is kind of an incredible. Who would have thought? We own Kinaxis, which is a supply chain business in Canada. We recently rebuilt a position in Toast, which I think is compounding at 20% plus. Compounding at scale, fantastic margins. So we've been active in software.
But okay, so I just want to get into Workday here very quickly. I didn't know you guys are buyers of Workday. I mean, they've had this transition now with the founder step coming back. They had the layoffs. I mean, this is a company that is at the core of the question you just said, which is it the install base or is it the flashier tools that will win in this era? I mean, Workday, look, it seems like one of those tools that, you could maybe do yourself and, you have larger corporations using it. But help us understand your thinking here. Why are you so confident in the founder coming back and in the company?
Yeah, look, if you ask large companies, you ask Walmart, large companies, hey, could you, replace Workday with a cheaper version of Workday? They have no interest in doing that. Workday goes back to this. Software today is a very small percentage of like Walmart's OpEx base. And they have no interest in trying some vibe coded solution, which this is mission critical stuff for Walmart. And when they think about the opportunity of AI, they're saying, look, we have tens of thousands, hundreds of thousands of employees, and we're looking for our software vendors to help us get savings. But the savings opportunity that they're looking for is in labor. It's in, hey, we spend a lot on recruiting. Can we use some agentic solutions to make recruiting more efficient? To go through a massive, to replace Workday is a multi-year journey, and for what? To save a tiny amount of cost? The reality is that there's been price competition for software vendors for years, and no one wants to switch. There is cheaper versions of Workday. There's cheaper versions of Salesforce. You see very little adoption because people like using the mission critical, the very best solution, and the time and effort to switch is not worth it. What they're looking for, you talk to these customers, they're saying, look, everyone's telling me AI is so exciting. Prove it. I want anyone who can come in and actually create savings, but the savings are going to come out of the labor market. It's just 5 times bigger. It's 10 times bigger.
Great. Well, Evan, I want to thank you for coming on. That is Evan Scorpin from Lead Edge Capital here on TI TV. It is time for this week's Editor's Cut. It was a big week of news for social media companies, not just the biggest companies like Meta, as Mark Zuckerberg testified at a major social media trial, but also for companies like Snap, which announced its subscription offerings crossed $1 billion in annual recurring revenue. We, of course, also had a story from our own newsroom about Pinterest and the code reds at that company as it seeks to improve its recommendation algorithms, keep people on the app, and measure advertising effectiveness better. To break it all down, I want to bring on Martin Peers and Meredith Mazzelli, who I know have thoughts on the social media sector at large. Martin and Meredith, welcome back to the show. It's great to have you here.
Hey, Akash.
You forgot to say your favorite editors, but yes.
Favorite editors, right. Okay, fine. My favorite editors, Martin Peers and Meredith Mazzelli. Okay. I actually say that with everybody, by the way, so it doesn't really mean
it doesn't mean anything.
Martin, I want to start with you. I want to start with the numbers here. This year so far, Snap, Reddit, and Pinterest are each down nearly 40%. Why do you think that is?
Well, I think that the reason varies for each of the companies. Reddit has been on an incredible tear since its IPO in 2024. It rose as much as 700% through September. So I think the stock has just come down for different reasons. It's obviously very expensive now, and the growth has been slowing a bit as it would. Pinterest revealed recently that its fourth quarter growth was well below people's expectations. Pinterest is blaming tariffs forcing one of its major, a group of its major advertisers from pulling back, which has hurt them. Snap is just Snap. Snap is this company that is small. It's run by one guy. He treats it as his own thing. It really shouldn't even be public anymore. So Snap just has a constantly disappointing performance, and the market doesn't like it. And the stock's now trading. I think this past week it has traded at the worst level ever since its IPO, which was 9 years ago.
So let's go to Reddit, though. I mean, Reddit has we've written a little bit about the AI play for Reddit, all the data that it's sitting on. I mean, this business is not one that you think could pan out here?
No, the AI part of Reddit, which got a huge amount of attention when it went public, is actually a very tiny amount of the total revenue. I'm actually writing a story about Reddit for this weekend, so I don't really want to step on my own story, but I can tell you that the AI part is just minuscule.
Okay, so well, that is the Sunday Insights.
That's right. The advertising is growing much faster, so I think the AI stuff was massively overplayed.
Okay.
But you'll have to read Sunday Insights for more details.
I was going to say Sunday Insights column. Look out for that one. That's a nice cliffhanger. Meredith, let's go to you here for. I know Pinterest is a company that you've studied a little bit, and you've looked at the sector. What stands out to you here?
Yeah, so I think it would be helpful to kind of go through the AI threat to the actual user base for all three of these companies. This was one theme that came up in our Pinterest story this week, just how much of a threat is there from AI chatbots actually taking users away from these various apps. And I think Pinterest and Reddit are probably the two most at risk, whereas Snap is a little safer. And the reason I say that is Pinterest is a place you go for ideas and inspiration. It's a place where I think the classic example is if you're planning a wedding, you make a Pinterest board and pin the bridesmaids' dresses and the invitations and stuff you want to buy, but stuff you really need some inspiration to figure out what you want. And I think that that's something that a chatbot can kind of step on the toes of, where you're going kind of asking a chatbot to curate these kinds of things for you. And I think it's a similar situation with Reddit, where there's a lot of different subreddits for nearly every category you can think of, but some of it is people looking for advice or people looking for product recommendations, beauty tips, things like that. And I think that that is also something that instead of crowdsourcing it from Reddit, there is that risk that more and more people are going and doing the same thing, with an AI chatbot.
Can I just interrupt here, because this is leading both to a Snap is in a good position, which by definition cannot be true.
Well,
And secondly, as a Reddit user, I don't really think I'm going to be like, oh, I won't look at it because I've read this AI written summary. What I'm looking for is individual people's experiences, which is what you get with Reddit. So I would push back at you that AI is really going to hurt Reddit. And I would also push back at the idea that Snap is protected, that Snap is, well positioned in any way about anything.
Okay. Well, but hold on. But we're talking about the AI threat. I mean, I see Meredith's point here. I mean, why would AI replace the need to, for us to send Snapchats to each other and us to connect with each other that way?
Okay, fine. Such a small
all right,
business.
point. Yes.
I just don't. Okay, fine.
All right, fine. So, but anyway,
scoreboard down here. Yeah. All right. There we go.
the underlying. Yeah, I mean, look, it's a comprehensive
Such a
picture.
small company. I mean, really, who cares?
I mean,
There's
it's not going
the
anywhere
ads
here, but
business.
the AI
There's
is the problem. Yeah.
AI isn't the problem. Fine. Yeah, I guess Martin, and we also know that the spectacles business is also one that I don't think Martin is very bullish on. Okay. So Meredith, I want to come back to you though.
Yeah.
Anne Guillen, our e-commerce reporter who wrote that story earlier this week, she had put forth this prediction late last year, that maybe a company like OpenAI could be a buyer for Pinterest as it seeks to spread its wings. And I mean, it got me thinking about who you think could be a buyer for Pinterest. Other than OpenAI, are there companies that come to mind for you?
So I think Amazon should have bought Pinterest years ago, is one fun thought experiment. And I think the reason, just backing up a bit, that prediction that we made with OpenAI buying Pinterest got a ton of attention because it has been seen as an obvious acquisition target for some time now. And there's been various rumors and various things, like various ideas that have come forward. When it comes to Amazon, I think there's a really compelling argument for they offer a different type of shopping experience that Amazon would arguably like. So you go to Amazon when you know what you want to buy. I want paper towels that are delivered tomorrow morning. That's great. But when you're going to Pinterest, again, you're really looking for ideas and curation, and you don't know quite what you're going to buy. You want to spend something eventually, but you're not going there with a specific idea in your head. So, I think that could be an attractive type of place for Amazon to play in. That being said, Amazon already has a pretty significant advertising relationship with Pinterest. So they, I think it was a few years ago now, basically made it so that you can click through Amazon ads from Pinterest inside that app, and you go to the Amazon site. So again, like they're kind of getting a little bit of that Pinterest vibe without having to actually own and operate Pinterest. So they may be getting what they want out of that relationship already. I know anytime you say Amazon and M&A in the same sentence, people will think antitrust. I mean, Pinterest is already like a third tier ad player at best. So maybe that's less of an issue. But yeah, I mean, I think Amazon, again, it's an interesting thought experiment, but if it's kind of like they would have done it already if it.
I also think that it's too small for them. It's not going to move the needle. I think that Pinterest is more appealing to a smaller company. And I can't think of one right off the top of my head, but it just feels like it might fit with a smaller commerce firm for which it could make a bigger impact.
What about, like, I don't know, eBay? eBay did a deal.
Not eBay, but what about something like PayPal? Because they're.
Well, there was a rumor a couple of years ago that it was a PayPal or eBay was actually interested in buying it. And it sounded like that was actually true. So, yeah, I think that's more likely than even OpenAI. I can't see that happening myself.
Okay, so Martin, last idea for you. What if these three companies we're talking about, Snap, Reddit, Pinterest, I mean, they're all advertising business. What if they just merge?
No. Evan has control of Snap. It's his little toy. You have to understand, Snap is Evan's toy. He's not going to do anything with that toy that would threaten it. And he doesn't have to. He's just, it can just trundle along.
That's fine. That's fine. I'm asking you if you think it would be a good idea. If you merged, let's say.
I think that they're too different.
Yeah.
I think that they're actually too different.
Too different.
I think
okay.
Snap stays public as Evan's toy. Pinterest will get bought eventually. Reddit, I'm not sure. I mean,
well, you clearly read Reddit a lot, so the business is very healthy and in the long term, it seems. Okay, well, all interesting ideas all around. I want to thank you both for coming on. That is Martin Pierce and Meredith Mazzilli, my favorite editors here at The Information. Okay. Longevity has swept across Silicon Valley lately as tech executives and entrepreneurs back ideas not just with their dollars, but also with their bodies, and the great lengths that they are willing to go to in hopes of extending their lifespan. This week, our health and science reporter, Amy Doxer-Marcus, wrote our weekend big read on that sector and took a deep dive into one particular pocket, mitochondrial donors. Amy wrote about the startups looking at that science, the few patients who have allowed these companies to experiment with their bodies, and what the realities are around where this technology is at right now. I want to bring on Amy to share with us all of her reporting. Amy, welcome back to the show. It's great to have you here.
It's nice to see you again.
How did you come across this business of mitochondrial donors?
One of the delightful parts of covering longevity is that people, especially older people, reach out to me and share their anti-aging strategies. And John Kramer, who's one of the people featured in my story, sent me a copy of a book he'd written about his own regimen and making a case for mitochondrial transplantation as an anti-aging therapy. And I was intrigued.
And tell us about John Kramer. Is he been in Silicon Valley for a while? Who is he?
John is a pretty renowned experimental physicist who's done research on the origins of the universe. He's 91 years old. He lives in Seattle, actually. And he got excited about this particular modality. Mitochondria are the energy centers of the cell. And so maybe as a physicist, he found himself gravitating towards energy.
Okay. And so tell us a little bit about John's journey. I mean, who is the company that he turns to? What is the ultimate path that he takes?
John is part of a company called Matrix Bio, which is located down the road from Silicon Valley. And Matrix is doing something pretty unusual. Mitochondrial transplantation is being used to treat diseases and in clinical trials, but Matrix has been applying this in a new way as a therapy against normal aging. And it's having people invest and also take the therapy, which is an unusual strategy to take.
So he is also an investor in Matrix?
Yes, he is. He invested $50,000 for a share of equity, small share of equity, and also to be one of the first people to try it at 91.
Okay, and tell us about how this therapy actually works now. Mitochondria, they are the energy centers. I think when I was in 5th grade, what I remember is they are the powerhouses of the cell. And I'm imagining the cell diagrams with all the organelles in it. I can still see the mitochondria right now. How does this therapy actually work?
Yes, I mean, calling on our old biology lessons here, but yes, the way it works right now, I mean, the way Matrix is doing it is they are having a family member donate blood, a young family member, because the idea is as you age, your mitochondria don't work as well. So you want to have a young donor. John's granddaughter, 26-year-old granddaughter, was his donor. She donated blood, and they extract the mitochondria from those cells, and they prepare it, and then they inject it into John, into his vein.
And then, I mean, in terms of the science here, so that's what happens on the outside. On the inside, it's basically what you're just getting a nice healthy dose of young mitochondria that you're then hoping the cells will sort of replicate and proliferate throughout the body.
Well, the mitochondria are, they are inside your cell.
Right,
so
right.
What's unusual about all this is, and this is sort of the emerging science, which people are still studying, they find their way back into the cell. They go where they're needed in your cells. And the idea is that you'll increase the young mitochondria and it'll start to work better. And your energy system will come back online. I guess that's kind of a layperson synopsis of it.
Huh. Now, what have been the results of these mitochondrial transfusions, I guess, that Matrix has been working on?
So Matrix has only tried this in 2 people so far. They want to make sure it's safe. John,
One of whom is John.
Yeah, he's 91. And then they also have another man who's 71, a lawyer from Houston, who also received this. They've received 3 of the infusions so far. They're going back for a 4th, and then they're going to analyze the safety data. And they're hoping that there will be 3 more older people who are paying participants of this small experiment.
And tell me about Matrix here. I mean, there are a number of companies in the longevity space, some of whom are even backed by billionaires, CEOs of even companies like Coinbase. I think he's behind. Actually, we had Jacob Kimmel from New Limit on the show here, and I mean, is Matrix one of the big fish in this sea?
No, I would call it a small fish. I mean, you have to, when you think about the sort of key players in Silicon Valley in the longevity field. You're thinking about Sam Altman, who put up $180 million of his own money to help launch Retro Biosciences. You're thinking about New Limit, which Brian Armstrong has backed and which has raised over $200 million, including from Founders Fund, Peter Thiel's fund. These are Altos Labs, which has $3 billion in funding. I mean, these are big players, and they have primarily focused on a different technique called cellular reprogramming, which tries to revert the entire cell back to a more youthful state and restore functions. So you have a difference in opinion on what's the best way to do this, to sort of try to like reverse your age or slow down your aging, make you more youthful. And you have a big money difference. It's an intellectual argument and a financial argument too.
And do we have any sense for timelines here? I mean, here we have Matrix that's done 2 patients. They're trying to get to 5, I guess. And I'm reminded of a story that I did on Synchron, a brain chip implant company, which is a Neuralink rival. I mean, again, this is a company that I think at the time that I wrote the story, they only had 10 patients with their technology. I mean, that's a totally separate ballgame. But my question is, I mean, how close are these longevity treatments to actually, making their way? Well, I guess we have to figure out if they're even safe or not first in the first place.
Yeah, I mean, look, the cellular reprogramming companies, they have a lot of funds, and they're going to probably take a longer, period of time. New Limit has said they hope in the next few years to launch a preliminary trial in people. Retro Biosciences has reported that a small number of healthy volunteers have received some preliminary type of thing in an early trial. Trying to get an FDA approval for a drug is a very arduous, long, expensive process. And the cellular reprogramming companies have indicated that that's the path they're going on. But if you're a smaller fish in the longevity sea, you don't have as much money, you're trying to like build the airplane and fly it at the same time. They took a different path, Matrix, and it's quite risky. Because, I mean, there's a reason why most drug companies prefer not to enroll people who are over 60, let alone over 80 in their trials. And that's because they fear that if something goes wrong just because the person is already kind of sick or has some sort of underlying health condition, they blow up their whole program. But Matrix needs to gather safety data. They need to get more funding, and they need to do it at the same time. So they've taken this different, unusual, but a path that could be a model for other companies in this space and for other companies in Silicon Valley that don't attract the attention of investors, big pocket investors, right away.
Great. Well, Amy, I want to thank you for coming on. It was a fascinating story. That is Amy Doxer Marcus, our health and science reporter here at The Information. That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank you all for tuning in. We really do appreciate your viewership. Make sure to subscribe to The Information on YouTube and follow us on X, Instagram, TikTok, and check us out wherever you get your podcasts. I'm already excited for our next show on Monday. Have a great rest of your Friday and have a great weekend. Bye-bye for now.